Hey everyone, it's Aaron Clark here with Keller Williams Wellington, and today we are talking about one of the most exciting things in real estate, mortgages. Well, maybe not one of the most exciting, but certainly important. And here to make it less headache-inducing, I have Dario with Vice City Lending with me. And it's a pleasure to have you, Dario.
Thank you for having me, man. I'm super excited. This is a subject that I get excited to talk about because there's so many little things that most consumers don't know, and hopefully after this video you can take a lot of golden nuggets out of this.
Yeah, absolutely. So in today's video we're going to be talking about some super helpful tips, some common misconceptions, and at the end we're going to have a little golden nugget for all of you. Be sure to stay tuned to the end. All right, Dario, let's start with one of the biggest misconceptions. What is the number one misconception people have about mortgages in today's market?
A lot of people have this misconception is because of the information that's available out there. Most people don't take the time to sit down with a professional like yourself and myself to guide them through the process, and they just really think it's that they need 20% down payment. And the reality is that there's so many different mortgage programs out there that you can even start with as little as 3%. If you're not a veteran, veterans can actually get 100% financing. They don't need to come into this transaction with any funds for the down payment.
Wow, so what you're saying is I don't need a small briefcase full of money to put a down payment on a house. I can do it as little as 3%, or if I'm a veteran, I qualify for a 0% down payment?
100%.
Wow, that's fantastic. All right, and on to the next question. And be honest with me, what is the number one mistake people make when it comes to mortgages in today's market?
So this one is the one that bothers me the most because people work so hard to get this far into the process. They've gathered all the right documentation, maintained their credit, saved their money. They're under contract to purchase a home. And as even us as a team, we provide them a do's and don'ts list so they know what to avoid. And some people, they just don't read their emails. But the biggest one that irks me is they buy a car in the middle of the transaction.
People really do that?
Yes. And the most common one is they co-sign for a family member. And they don't think that they're going to be personally affected, when in reality it can absolutely crush the deal last minute. So please refrain from obtaining any kind of credit lines while you're in the middle of the process of purchasing your home.
So no new toys until you get to the keys of the house.
Of course.
All right, and now on to interest rates. So people hear numbers and they panic. What do you wish people actually understood about interest rates and the importance of that?
So very important is to not hyper focus on one specific number. Us as brokers, we're able to provide a client what's called a wholesale interest rate. It's going to be the ability to get a very competitive rate, but at the same time, the rate is not everything. There's multiple different factors. You're talking about down payment, closing costs, monthly payment, interest rate. And one thing that we're big on our team here at Vice City Lending is making sure we educate the consumer so they know exactly what to look for, because in my industry it's very, very common to hyper focus on one number so you pay no attention to the remainder of the numbers that make this whole deal happen. So making sure you don't focus on one specific number is going to be key, because there is multiple different factors that will ultimately make the difference whether you're going to get a really good deal or a really bad deal.
All right, let's talk about pre-approval. How early should buyers be thinking about the pre-approval process, and what tends to happen when they don't?
So this is my favorite subject on this video today, and the reason for that is because you have to prepare to know what numbers you're going to have in front of you before you go shopping. I think the perfect time is to start when you're thinking that you want to buy a house. If the thought is coming, you know the necessity is there, and you want to go ahead and buy a house, you need to sit down with a mortgage professional first. The earlier, the better. It's going to allow you a lot of time for you to prepare to make sure if there's anything that's not lining up, whether it's income, credit, or savings, something, you're going to have enough time to make sure that you prepare ahead of time. And I think the biggest mistake that people make is they go shopping for a house, they're not buying cash, and then they lose out on an opportunity because they want to submit an offer, and then the listing agent notices that there's no financing in place, or you're very early in the process, so they don't trust that you're the person that's going to go ahead and close on that property because there's too many unknowns.
Well, that's great advice, and I always relay that information to my clients as well, that pre-approval is always the first step. It shows that you're a serious buyer. Can you break down some of the real options for down payments when buyers don't have a suitcase full of cash ready to buy a house outright?
Yeah, so as we just mentioned, it's very important for you to understand what your qualifications are. If you're self-employed, if you're an employed person, or if you're a business person, all these numbers can vary. But generally speaking, when it comes to your traditional mortgages, you're looking at an FHA, which you're going to be able to give 3.5% down payment as a first-time home buyer. And then with a conventional loan, you could give as little as 3% as a first-time home buyer, but typically the average is going to be 5%. And then from there, you can go much higher percentages. Investors, we have multiple different programs where you could give as little as 10% on fix and flip. Yeah, fix and flip programs. We got a 10% down payment program. Generally speaking, you're going to be around that 20 to 25% down payment as investors. But there's just so many options. The trick here is just asking so we can identify what's the best program for you in that case scenario.
Well, that's great. So what you're saying is I don't need a pile of cash laying around to buy a house. I can go in with some options.
Absolutely.
All right, so now we're on to the next topic and about expediting the process. What's a good, super helpful tip that would help buyers get through the pre-approval and mortgage process quicker?
So I think getting organized is going to be the biggest key here, because most of us don't have laying around all the paperwork that we need, your pay stubs, your bank statements, your taxes, your W-2s. There's going to be a lot of different documents that are going to be necessary. Our team is big on getting the job done very early on in the process. So we're going to pre-underwrite the whole deal. So that means that we're going to require 3 pieces of information: a mortgage application, the supporting documents, and a credit report. Once we get all 3 pieces to the puzzle, we're going to go ahead and be able to get basically a pre-underwritten pre-approval. So when you go out shopping, you're going shopping aggressively, giving the realtor very favorable position to negotiate on your behalf. So get organized, guys. Create a new email that's just specifically for the transaction so you don't get lost in the communications, and try to organize all the documents. Our team takes it one step further. Depending on the loan program that you need, we'll be able to provide you a document checklist. So like that, you can basically go down the line of everything that you're going to need.
Okay, and this next question is for self-employed people like myself, and I'm sure some of you watching are. How hard is it really to get a mortgage when you are your own boss?
It's actually not that hard. My biggest piece of advice, if you work for yourself, is save money, guys. Pretend that you're going to be saving, I would say a good number is 20% of your paycheck. So you can have some for savings and some for taxes. Okay, us as self-employed individuals, the goal is to pay as little taxes as possible. Right? But the goal is also not to overspend the savings that you're doing, because you're going to need a little bit of a higher down payment. Our self-employed borrowers typically need about 10% down payment. And instead of looking at your taxes to calculate your income on the mortgage application, we're going to look at your bank statements. So it's very important that you have the 10% saved. The cash is the one that typically gets everyone who's self-employed. But if you plan yourself accordingly and you save some money for taxes and you save some money for down payment and closing costs, you're going to be super favorable. And these programs are basically on a very aggressive pricing in today's market. They used to be traditionally known to have way higher interest rates than if you were to go with taxes on an FHA or conventional, but now they're actually very competitive.
Okay, so we have all these documents. What about credit? What's a good tip to help boost a credit score if it's not exactly where it needs to be?
That's actually a great point, Aaron, because we talked about the 3 major keys of your finances that we're going to be looking at, which is your income, credit, and savings. What I like about credit is that out of those 3 important factors is actually the fastest one you can fix. It's not easy to find, cash laying around and increase your down payment, and changing your income history could be difficult at times, but credit is actually quite simple. My biggest advice is, if you're struggling on the credit sector, chances are it's going to be your credit card utilization. Most people don't have delinquencies or a lot of late payments that can drag your score down. It's typically credit card utilization. Most of these credit cards report to your personal credit. So if you have a $5,000 balance, you need to keep that under 30%, which is very little. So one of the biggest advices after you buy your house is get as many credit cards as possible, simply because you're going to have a lot of credit limit and very little credit utilization. But one cool nugget that you can do, which works amazing, is actually being able to get onto someone's credit card who you could be hopefully granted to be an authorized user. You don't need to use their credit card at all. It could be a friend or a family member. And my easiest pitch is, can you please just let me do this, because I'm not going to be using the credit card at all. The high level benefit here, you're going to adopt their credit history that's positive if they have a high credit score and a high credit limit, but their credit score will not adopt your negative credit history. So if you're able to get as an authorized user on someone's account with a high credit limit and good credit, you'll see super fast results. I've seen them as fast as 45 days where you get like 30-point boost.
All right, and the last question is our golden nugget question. What is one golden nugget piece of advice that you could give to today's buyers when they're looking for mortgages?
So there's a lot of them that we can talk about on a one-on-one basis, but one that's very important is people want to use additional funds to buy down an interest rate. Okay, the easiest way to calculate this is ask your mortgage professional, what is your monthly payment difference? Because if you're going to be saving $50 a month and you're going to have to put $5,000 to drop your rate, for example, from a 6% to a 5%, the 5% looks very, very attractive. However, it'll take you a lot of years to recover on a monthly basis your $5,000 back. So don't hyper focus on one singular number. Ask a lot of questions in the process with your mortgage advisor. There's no such thing as too many questions. We're here to guide you, but definitely pay attention to your rate of return and when you're going to get your money back to see if it's going to make any sense.
Well, Dario, I certainly appreciate it, and that was super helpful and incredibly painless. And as a real estate agent, I appreciate that because I can relay clear information to my clients. But if you have certain mortgage questions, be sure to drop them in the comments and I will make sure Dario sees them. And until next time, you know where to find me. And don't forget to subscribe and like the page.